So, the US Federal Reserve made its 9th rate hike in 3 years and pushed the federal funds rate target to a new range of 2.2 to 2.5%, its highest level in a decade. That rate is closely tied to consumer debt, especially credit cards, home equity lines of credit, and other adjustable rate loans. So for us, we're finally starting to enter an environment of rising interest rates, which crypto has never seen before, and is going to be potentially challenging to the price of a lot of crypto assets, just like it will be for a lot of assets in general. So while I feel this is one of the most pertinent topics to talk about regarding cryptocurrencies and what's going on leading into 2019, I also want to have a discussion on some of the other big trends that are affecting or helping crypto as we move into the new year. So let's have a catch-all conversation about some of the things that should be discussed when talking about the future of crypto. And hopefully we'll be that much wiser moving into the new year. Welcome to ReadySetCrypto. This is your brain on blockchain. So I want to stress that this video is not about making predictions. This video is talking about trends, what we can reasonably expect over the next year. If you've been paying attention to my channel over the past couple weeks, I've been talking a lot about STOs, security token offerings, and really the concept of a security token in general, because I believe that will be one of the most impactful trends we'll see in 2019. Now, a lot of people, when trying to predict the impact of security tokens, they talk about it in the wrong way. They talk about how, tokenizing equity, tokenizing real estate, tokenizing collectibles. This will help with cost effectiveness and administrative overhead and just the speed and efficiency of things. And that's all very true. But I think the two most impactful things that we'll see with the advent of the security token is first, legitimacy. Adding legitimacy to the overall cryptocurrency space is something I think we all want. And the best part about STOs is that we're not selling out our soul to do so. We're not letting Wall Street dictate what crypto is and is not. STOs are their own industry, but they will support the development and maturity of the cryptocurrency space. A rising tide lifts all boats, and developments in crypto will help STOs, while the proliferation of STOs will help crypto be more adoptable. The other big thing that STOs are bringing is a global pool of liquidity for private equity. This is something that doesn't seem impressive at face value, but when you look at something like Bitcoin, which is going after monetary transactions, trying to replace fiat, only 30% of the world's wealth is locked up in fiat. The rest of it is in things like equity, and a large portion of that 70% is private equity, and it's only continuing to grow. IPOs have really fallen out of favor as companies shy away from the regulation and the requirements of going public. So the STO is the right tool at the right time to tap this global pool of liquidity and really open up the private equity market. To compound upon all of this, because I see STOs as such an opportunity, I'm excited to talk about my new STO class, which is sort of a hybrid because not only is there an educational piece as we talk more about what security tokens are and how they will impact the world, but there's also an insider group aspect of it. We're gonna have a private Discord channel where we're gonna share insider information on how to get in front of this rapidly expanding trend. Hopefully you see the value prop where you could go and try to research this stuff on your own, or you could join a tight-knit community and let someone like me help you find these opportunities. Not to mention, I'll also periodically bring in subject matter experts, people from these STO issuance platforms and exchanges. And look, this sort of value stack is something that someone else would charge you thousands of dollars for, but I've always been about offering value at such a low barrier of entry because I don't want the price to be a deciding factor. So if you're interested in joining me, the link is below and I'm excited to share it with you. So the next trend I want to talk about is the crypto market itself. Certainly over the past couple of years, there's been a lot of focus on crypto prices, volatility, and market capitalization. The prices of the crypto space have normally been volatile, but the overall trend of the crypto market over the past couple of years has been upward. I think today's rate hike announcement once again highlights how most crypto assets are deflationary. And as awareness spreads, there's an increase in demand in that. That will in turn push prices back up. Certainly there's 500 days before Bitcoin's next difficulty spike, a halving event. And looking at previous halving events, we saw the price of BTC steadily trend upward before that. But at the same time, We don't want to be truly desperate and look to 2020 for a price increase. We want to know what's happening next week and next month and really over the next year. But I think the Bitcoin halving event is a good example of how this market is cyclical and how there's always developments to look forward to. I think the thing you always have to keep in mind is that no matter what the price is doing, people are still working on this space. They're still pushing the envelope, and blockchain is by no means dead. I mean, if you really think about it, the people we revere as being lucky are really the ones who are aggressive in bear markets. Now, these people are either legends or fools, but either way, in the depths of a bear market, that is where maximal opportunity is. So the market does its best to price large events in, but it's by no means a perfect representation of overall sentiment. In fact, it often trades against overall sentiment. So as I've often declared through this medium, don't follow the investing herd. Don't join the chorus of sheep proudly bleating the return of a bull market just because we've seen a couple days of positive growth and not a reversal to the downside. Don't be like the herd who believe that institutional money is lining up at the doors and coming into the space in 2019 in droves. Instead, expect pain, anticipate fear, strategize your entries and exits, separate your personal feelings from your professional trading mentality. Sure, everyone would like to see the market grow, but you've got to respect the possibility that it might not. As an example of this, Mark Dow, a former International Monetary Fund economist who went short about a year ago, finally covered his position. He admitted that it could go lower, but it's not a game he wanted to play if he's already won. But at the same time, he didn't immediately turn around and go long. Sometimes the winning move is not to play. But at the same time, when we go long on Bitcoin, we're not betting on a finite state. We're betting on tomorrow, and that the promise of innovation will outpace the challenge of the space. It goes without saying that long-term, a bet against the future is a foolish one. So I think that's the next trend I want to talk about, is how there's more of a push towards decentralization. There's a growing chorus of decentralization approaching. In just about every industry, there's a startup or a couple of them building disruptive applications that will run on top of a blockchain. There's interest in major technology companies and public institutions around the globe. The full results won't be seen for years, and yet everything shows that there will be only more improvement from different stakeholders in building more solutions on top of the blockchain. One good example of this is the rise of decentralized exchanges. Now, centralized exchanges can be hacked, charge you fees, and require a lot of time. And as we've seen over the past couple weeks, a lot of them are faking volume. They're charging projects outrageous fees to be listed on their exchange, and yet 98% of their volume is completely fake. So while the first decentralized exchanges have been slow, they've lacked liquidity, I think that's really starting to change. Decentralized exchanges are trending towards being more liquid, and there's a real desire to manage your own wallet's private keys. So I think this represents a microcosm of what is the larger trend. Yes, there is a push towards decentralization, but we can't at this moment leave the benefits of centralization. So over the next 5 or 10 years, really the push is towards a hybrid model, combining the benefits of both centralization and decentralization. I mean, that's on full display right now with a lot of the major projects out there. A lot of major projects are centralized in many different forms because, as it stands, decentralization is a privilege. It's something that's very hard to achieve. But I think that will be remedied with better solutions in both scalability and interoperability. The trend we might start seeing is more blockchain interoperability. With more blockchains coming to the space, we'll see the industry undergo what the internet went through in its development to what we know it as today. We're at the point where the blockchain industry is moving forward, developing protocols that will ensure that anyone can build public or private blockchains, but their projects will still be able to communicate and share with those that are already in existence. Just like how TCP/IP protocols made it easier for data to flow throughout the globe in seconds without the necessity of intermediaries, with blockchain we'll also see value able to flow throughout the globe with little regard for the traditional barriers. So what does the future of crypto hold? I mean, there's many obstacles in making accurate long-term forecasts. The crypto sector is young, it lacks regulation, and is highly susceptible to speculation and manipulation. Fortunately, the crypto industry is maturing, and most of the causes for high volatility that were relevant before are slowly dying out. In turn, we're also seeing digital assets be more reliable and a significantly more convenient financial instrument compared to the legacy systems. So there's a lot of different directions that crypto can go in 2019, but I think we've moved from the hype cycle that dominated 2017 into 2018, and now we're in a much more reasonable place, and I'm really excited for the future of what crypto is going to be. So let me know what your thoughts are. What do you think is going on heading into 2019? What do you think are the big trends that are going to dominate the space? Let me know in the comments below, and I can't wait to see some of the discussion that comes about. So thanks for watching. I'll catch you in the next one. Cheers.